Bulls charge forward as inflation cools and awaits the Fed's next move. So far, the top story of the week is that inflation is cooling and the Fed is getting what it wanted, a somewhat soft landing. The Consumer Price Index came in under or at expectations in each category. It's why the market is assuming the Fed will be pleased enough to pause rates during the June meeting and revisit them again in July. Seeing the year-over-year numbers drop from 4.9% to 4.0% in a month is significant, given the 2% goal the Fed has in mind. To eventually win against inflation, we need that number to drop by more than 0.1% each month. Significant progress was reported yesterday, and that was enough for the bulls to keep the rally going. The Fed is likely to come out with some mixed messaging today. They have to be encouraged by the various economic reports, but hawkish enough to keep the pressure going against inflation and stagflation. The one sector that you might think should be going down as people fear a recession is the consumer discretionary, XLY, but you can see that the sector is bucking expectations. It broke above an area of consolidation and is screaming higher. The American consumer is consuming while inflation heads lower. The job market hasn't completely fallen apart. It's been a rough ride along the way, so I'd call it a bumpy landing. We're not done yet though. While companies are raking in record revenues, their profits are slimming. Wall Street won't allow that to happen, and a reckoning of sorts could still be coming. Consumers are spending money, but also borrowing increased amounts and paying back less and less each month. The three scenarios after the Fed has their announcement are that they mention everything is wonderful and the bulls retain control and we march higher. Another possible scenario is that the Fed says something too hawkish and we get a 5 to 10% pullback. And lastly, I could see this being a buy the rumor, sell the news situation, where despite the Fed doing what is expected and not raising rates, the market could retreat from here, since fundamentally and technically we've risen too far, too fast. That's 2 out of 3 scenarios where I see the market pulling back, but I've certainly been wrong before. I thought the Nasdaq 100 had been in need of a pullback for a couple of weeks now. While I am still overall bullish on tech and the major players like Microsoft, MSFT, let's look at the daily chart of MSFT to see why I think it's cooling off. There was an impulse move higher, followed by a pullback, another impulse move higher, but now look at the right of the chart. There was a 3-day pullback followed by a move higher that hasn't cleared the last swing high while volume is decreasing. I see the stock pulling back to $315 over the next 30 days. Coca-Cola, Co., isn't the greatest mover when it comes to stocks. You can see that it's been in a fairly narrow trading range between $60 and $64 for 2023. You can't expect much when the beta of the stock is 0.56. Any trade or trade idea discussed is for educational purposes only. For more information on this story and others like it, visit tradersreserve.com.